All right, highlight for today, buyer, buyer, buyer. Satisfy them, go to a target. What does that mean? Well, when you're reading markets, if you're a little bearish and you think they could go down in this example, and we're watching these gray lines of a big bidder chasing it, as soon as they satisfy them, generally, there was 222, 177. And when you have a market that does that, you have the market's chasing it. As soon as they satisfy it, generally it's bearish and there's a quick move lower. Now, there was something that was great about this, and it wasn't just order flow, but it was also the NASDAQ, which is an ancillary market to the ES. This is the ES, and this is a footprint of it. And these are big buy orders that come in, chasing it up. But also, the NASDAQ had sell stops set up below at the same time, and they cracked through those right in here when the ES was setting to go through those big buy orders. And they did break them about 4 points. Now, here's the other key. This should hold as resistance, and it does. And when it doesn't, you put horns on, at least temporarily. So you're not only using this for near-term direction, but also subsequent support, or in this case, resistance. So up in here, this happens right there, comes back and holds. But then once it gets through it, you know when to stop being bearish. You know what I mean? So then if I just go to the NASDAQ chart that we look at and go to 10 minutes before 9 Central, and that's when this happened. And I went too far. But you could see, where was it? I didn't go far enough. All right. Right here. Where the heck was it, Dave? I think it was right.
Like 8:55, you're too far. You're about 45 minutes too far.
Oh, okay.
Back up.
That makes sense. Daylight savings in Europe.
A little bit more.
Yeah, this thing is touchy. Right there. Right here. Right?
That's it. Yep, that's it.
So this is a consolidation box. They get through the bottom. They just have a good chance of going and picking up some steam to the downside. This is a much better break all the way down to, at the time, 16 area in the NASDAQ from 46. So they had a nice 30-point break. But when you put that and you use it, conflate it with this guy, you put yourself in a position to use order flow with market correlations. And I say it 1,000 times, I'll say it another 1,000. You got to conflate the two most important concepts to value price: buyers and sellers, which is order flow, and market correlation, which everybody uses when you buy cars and plane tickets and houses and anything with a price attached to it. In order to find value, you like to compare it to something else. Could be apples to apples, could be apples to oranges. As long as you know that there's a relationship. We talk about the Russell, the NASDAQ, the Dow. So once in a while, talk about the DAX, talk about European equities, talk about the bonds when there's an opposite reaction. It's the governing principle to what drives price. And if you don't understand both, you're missing two giant pieces to the puzzle you're trying to put together. Stay safe.